Joining us now to discuss the crypto markets is 3iQ Head of Research, Mark Connors. Welcome, Mark. I understand that you had some thoughts on our previous guests from Nansen about BNB and the like. So feel free to chime in here.
Great. Thanks, Lawrence. Thanks for having me on. And Emily, Christine, great to see you. I love the interview because I think it sets up the difference between 2023 and 2022. In 2022, we woke up and found out someone was hiding in plain sight with the FTT tokens used as collateral, as you guys were talking about with Nansen. And yes, you guys were early on that, ringing the bell. And I think that was an evolutionary step, that the technology is there to sort people out, but we're not using it correctly. We know with the Alameda exchanges in FTT tokens uses collateral. So the Binance question that you asked, I think Nansen answered pretty clearly, is that we don't see that same kind of collateral use, number one. And number two, Lawrence, when you were talking about that gross versus net, great question. And I think that Nansen put it in context. They said basically, yeah, what was it, 15 billion gross, 2 billion net? We've seen that before. So it doesn't seem like it's unusual. So I guess where I'm going with this is 2022 was crypto's default cycle. Today, it's traditional finance's default cycle, as we're seeing with the banking. So we've gone through the car wash. We've had the we can't sell. We've had the bad actors exit, but we still need more clarity in Binance. So I do think we need that. That's not out of the woods yet, but I don't think it's a FTT or FTX animal.
Well, I do appreciate the praise. That's a great way to butter up your interviewer. I think the question here I have now is, of course, at least for the viewers, is what does it mean for me? Because we look at Bitcoin. Bitcoin is up 17% over the past 2 weeks. We've had all sorts of negative headlines regarding regulation from Coinbase to Binance to this to that, and nothing seems to be positive. Yet we have this rally. How would you explain this? I mean, how does this all make sense for people who are seeing? They're used to when bad news comes out about some of the biggest players. Usually, it hurts the token, but we're not seeing that.
Two things. Positioning. So we came into 2023, back to the initial comments, with a washout of weak hands and leverage in the system. And the price of Bitcoin was below that critical 200-week moving average. It hit between 13 and 16,000 a few times in Q4 into Q1. So it's positioning, number one. It was washed out. Number two, we're approaching the halvening. So there's a chart that we have that shows the logarithmic return of Bitcoin over its life cycle. And what we've done is we've taken each year and put the return in red or green. And by happenstance, and I'm joking, not really, there is a pattern of 3 up years and 1 down year that play into and around the halvening cycle.
Do people still keep track of the halvenings? I mean, I recall it being a big deal 3 years ago, but I mean, here we are again.
Yeah, so that halvening's happening next year.
Yeah, Lawrence, I love the little goad there. Are they still looking at the halvening? Does the supply of Bitcoin matter? I don't know, Lawrence. Maybe it does to some people. and here we go. But the reason we do this is because, we're not necessarily in an echo chamber, but we're familiar with these dynamics. And when you go out and talk to some people, they're not. So when you look at this graph, it at least is supposed to pique interest to ask the next question. That's why we have it. We had a webinar on March 15th because of the banking crisis going on to talk about, the positioning, just what we're talking about here. The position of Bitcoin, which is favorable, the halvening. This chart out of 20 charts was the most clicked by a lot. So it does seem to get some interest from folks, and that's why we want to share it with you guys.
And you're saying that BTC is outperforming traditional safe havens like gold and U.S. 10-year treasuries.
Yeah, and look what it did in, I guess, March 8th or so with USDC. People ran to Bitcoin in that USDC Bitcoin pairing. And so that was within the crypto universe. And then broadly, as you're pointing out here, Correlations dropping versus equities. Here we are, 28% correlation to the NASDAQ versus when things were hot between June and November, when it was in the 70s. Very unusual. Yeah, it was very unusual to have someone hoard some Bitcoin and then sell it in May, like Do Kwon did. And then it was also unusual to have a multi-billion-dollar fraud like FTX that caused more FUD. That's gone. So that's why the correlation's dropping. That's why Bitcoin's up 63% this year, or 70% now.
Yeah, well, you say another headwind could possibly be the U.S. government, the White House.
So that's going to cause, there's no doubt that Bitcoin's price will have a variable path. Just, put your mouth guard in, put your helmet on, because the waves are coming. But the overall price trajectory, it's very favorably. The asymmetry, Bitcoin, I'm going technical here. Tell me if the tin hat needs to come off. When people look at equities, there's a normal distribution. You have some good days, you have some bad days. It's the way it goes over any kind of 1, 5, 20, 30, 100-year period. Bitcoin doesn't operate that way. It has a logarithmic scale. It punches far to the right. It has more up days than down days. And that's because it's an exponential grower. There are more people adopting Bitcoin every year or over any 2-year period. That's not the case with treasuries. The treasury is looking for buyers at this point. More people are selling treasuries, protecting their own currency. So that's a dynamic going on, and that's a fundamental and structural, albeit not exactly easy to understand, dynamic that we want to bring to the fore as well.
Speaking of correlations, in crypto, we've usually had this rising tide lifts all boats phenomenon where Bitcoin goes up and then ETH goes up and then everything kind of goes up. But do you think we're starting to see a little bit of a deviation from that path? Like, it looks like Bitcoin is starting to break out a little bit on its own. Are you seeing that? And if so, why?
I still think, Emily, we're still in the safe haven period. And the most people in traditional finance look at the VIX. VIX doesn't matter. It's been dead for a while. There are reasons why. It's a lagging indicator at best on risk in traditional markets. But rate volatility, when interest rates have higher volatility, that's like the tectonic plates of finance shaking. It takes everything down. So we're seeing it in banking. So we're still in an uncertain period. You're not going to see the follow through on the L1s and on L2s until we stabilize. So think of it like a slinky. Bitcoin's leading the way. We have to have things stabilize, and the rest of the sound protocols will follow, but not yet.
Mark, let's just bring it to the near term before we wrap things up. But Bitcoin heading into the weekend, what are you seeing in the options world?
Yeah, so you brought it up. We do have expiry going into it, and there are some strategies where people will, sell puts in order to kind of knock into Bitcoin. So the Bitcoin options have never really been a big driver, like sometimes in triple witch in equities they are. So going into the weekend, I think it's going to be headlines on Binance and banking. That's what's going to be driving. I don't think it's going to be the technicals of options right now.
All right, Mark, thanks so much. That was
Great,
3iQ
thanks.
Head of Research, Mark Connors.